Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome into a brand new episode of WSI TV. I'm Sean Bauer. With me is Jordan Bishop, and we have a couple of really cool topics to get to today. We're going to get to Blackberry and its resurgence possibly as they're switching away from the traditional phone company that you know them as. We're also going to get into a brand new IPO that's already returned 65% gains just in the first day of trading. But I guess first we should start by addressing why you have this nice little sippy cup on.
Yeah, I've had to pour my Guinness in a sippy cup today because of you guys, actually. We had a load of emails written in for my punishment, and I'd say the majority of them wanted to see the sippy cup for some reason, which I'm okay with because there could be a lot worse in there. But yeah, going with the sippy cup today, so I'll be enjoying my nice cold beverage out of it.
Yeah, at least it's not another hot sauce shot.
That's right, yeah.
But again, this is Jordan's punishment for losing versus last round, so he's going to enjoy drinking the Guinness through the sippy cup all episode long. But with that taken care of, let's move on to Roku. This is a brand new stock now. They just launched the IPO last week, and they priced it at $14 per share, but that is not what it ended at by the end of the first day of trading.
Yeah, it actually closed at $23.12, but just to fill you in, actually, IPO is initial public offering.
Right.
It's when a private company goes public and offers its shares to the public to buy, and they offered theirs at $14, and like I said, it went up 65% or so, ended the day at $23.12, which is a great first day. A lot of people on the inside of Roku got very rich from that, but now we want to tell you how you can get some cash in your pocket from it.
Yeah, absolutely. And again, this is Roku Inc., the ticker ROKU. And if you don't know, this is a streaming device where you can watch stuff, like Netflix or even HBO and things like that. You can watch YouTube on there as well, so you might actually be watching us from your Roku. One of the things we wanted to cover about Roku is whether this is more of a fad or an actual trend here. That's why we took this fact from the Pew Research Center, where they said more than 60% of people aged 18 to 29 years old say they watch TV primarily through online streaming, which again, that's what Roku provides. It is so you can stream your television. So this does look like, especially for the younger generations, this is definitely becoming more of a real trend and not just a fad.
Right, and what I really like about this company is, Netflix is out and HBO Go streaming is out, Amazon Prime and all that stuff, is really taking over the TV space. But what this company has done, they've capitalized on that. They've found the market, they've looked for what people, the main consumers of our market, aged 18 to 29, like you said, they've seen what they wanted. They've created a great product that gives you access to all these new streaming services. So I mean, there's no technicals there. Obviously, the chart looks a little funky. It's just one day, as of Thursday, that is. So we'll see how that shapes up. But as far as fundamentals, I think this company looks great.
Yeah, just to add to it, I mean, that customer base that they've really gone after here from age 18 to 29, I mean, this customer base should just be growing. The market should get bigger and bigger for Roku as the population ages. So it should have, that growing market to keep selling to, which is just obviously a really good sign for Roku. So I think we're both in agreement there. We're fond of this stock, I think.
Yeah, definitely. And going from a brand new stock to quite an old stock, actually. You might remember the name Blackberry. They were a big phone company famous for the phone with the full keyboard on it. As you can see, Blackberry has done really well in the past couple months. That all boils down to their CEO that they appointed in 2013. He's really brought the spark back into this company, and that's mainly because they switched from phone manufacturing to software and services.
Yeah, that's right. I mean, they're doing a bunch of different stuff now where they're not even manufacturing their own phones like they used to. They've moved on to licensing security products, software for smart cars or for connected cars, and things like that. So it's definitely a brand new direction. And just to point out here, as you can see on this daily chart here for Blackberry, that last spike that you see at the very end, that is from a really good earnings release. They just reported their earnings, beat estimates, and they actually were profitable, which I think they were projected to just break even. So a really solid report for Blackberry.
Yeah, I know they have about $2.8 million in cash reserves available in their company right now, which is great considering the dire times they went through a couple years ago. Obviously, this new CEO has switched things up, and when things go wrong like that, that, you always need a fresh perspective, and that's clearly what he's given BlackBerry. But looking at this weekly chart right here, you've got to love the upside.
Yeah, absolutely. I mean, back in 2008, it was at $145 per share. Right now, it's at $10 per share. So, I mean, this is one of the biggest discounts we may have ever seen if this does turn around the way it looks like it's starting to. Obviously, a ton of upside there. As you correctly pointed out, whenever they switched to a new CEO in 2013, you can see on this chart how it just stopped the bleeding there. No more downward movement. It did go sideways, but that's a great sign for something that was plummeting. It's just sort of consolidating there, getting ready to skyrocket, we think.
Right, and just to put the icing on the cake on this, we look at all these, I mean, BlackBerry now considered a tech stock that they don't produce their own phones and stuff. We look at these tech stocks, we like to compare them to the big tech stocks, the FANG stocks. You got Facebook, Amazon, Netflix, and Google. Well, this year, BlackBerry has outperformed all four of those and Apple. So it really shows you what type of moves they're making in that company. I was going to say small company, but it is a massive company that's just looking to resurge and gain population again.
Yeah, and as BlackBerry's moved from hardware to software, already this year up 50% on the year, like you were just talking about, beating out all these big FANG stocks. So this looks like BlackBerry is back, and it could have a long way up to go. So we'll keep track of that for you guys. But as we take our final sips out of the sippy cup punishment, we want to thank you for watching. Thanks for being with us, and we'll speak to you next time.
Cheers.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.